Hello traders, welcome to the video. In this video, I'll be showing you a very powerful spike cashing boom and crash strategy that you can use to grow as little as $10 account. So this strategy, if you pay close attention and follow the rules I'll be given, you will be making a lot of money out of these boom and crash markets. So if you look carefully on my chart, this is the 1 minute time frame and this is the boom 1000. So first thing we want to do is to set up our chart. So you click on this indicator icon over here. As you can see, I have series of indicators. I have moving average, relative strength index, Ishimoku, and another moving average. To select the first moving average, click on the F icon on the main chart and search for moving average. Make your period to be 15, shift to be 0, method to be simple, apply to close. For the styles, make it color of your choice. After that, click on save. For the relative strength index, click on the F icon on the main chart again and search for relative strength index. Make your period to be 1, apply to close. For the levels, click on this pen icon, add level, type 85, 10, 90, and 15. For the style, make it color of your choice, make it pixel of your choice. And over here, make the style to be color of your background. If your background is white, use white. And if yours is black, you should use black. After that, click on save. So the next indicator is the Ishimoku. Click on the F icon on indicators Windows 1 and search the Ishimoku. Make this to be 6, this to be 6, this to be 52. Fill this. Then for the styles, make this to be color of your background. The main thing we need here is the up Kumo and the down Kumo. Make it color of your choice. Then make the rest to be the color of your background. After that, click on save. And the last indicator is the moving average. To select that, click on the F icon again. Then search for the moving average. Make your period to be 5, shift to be 0, method to be exponential, apply to close. For the styles, make it color of your choice, pixel of your choice. After that, click on save. So make sure that the color you choose for these indicators are clear enough on your chart. So to catch spikes for the zoom level, you want to zoom out completely like you see over here. So to catch the spikes to the upside, what you want to pay attention to in the bull market is the 15 and the 10 level. So you can also use the higher time frame, let's say the 1 hour time frame or the 15 minutes time frame to determine the trend of the market. You want to pay attention to when the higher time frame in the bull market is in an uptrend and when the higher time frame in the crash market is in a downtrend. So over here, you pay attention to the 15 and the 10 level after you have determined your trend. So you want to see spike to the upside after you have the Ishimoku touching the 10 level. You can see it over here. And then breaks to the upside. Once you have the spike, you want to place your entry at the middle of the candle that causes the spike. Then your stop loss will be below the candle. You want to wait for market to activate it. Then you want to target spikes that happen after this high is broken. So you can see over here, this is the first spike, did not break this high. This is the spike that break this high. Then you wait for another spike to the upside. Entry here, stop loss below here, and then you will target this point. So the spike, after the spike that causes the break is where you will close your trade. So let me show you more example. So pay attention to this. You have market rallies to the downside, pushes the Ishimoku and the moving average into the 15 and the 10 level. So after that, you want to see a spike that breaks the moving average on the main chart. And you put your entry around the middle of the candle, stop loss below here. Then this is the first high. You want to see market spike to the upside, break this high. Then after that break, then you want to wait for another spike. So you will enter here, stop loss below here, and then you will be targeting this high. You see how nice that setup is. So this strategy, I will not say it is 100%. You will be getting at least 80% win rate trading this strategy, because sometimes you are likely to get caught before you have the spike to the upside or the downside. So this is the crash 1000 market. Don't forget the zoom level, you zoom in completely. So what you want to pay attention to is the 90 and the 85 level in the crash market. And first thing you want to do is to determine your trend in the higher time frame. 15 minutes time frame, you want to focus on when the crash market is in a downtrend. You can also use this moving average to judge that. So after you have the entry, you have this spike to the downside, your entry will be around the middle of the spike. Stop loss above here. So you are waiting for the spike after the spike that break this low. Once your trade is activated, this is the spike that break this low. Then this is another spike to the downside. Entry here, stop loss above here, and then take your TP. Immediately this spike closes. This is also another one. You have the Ishimoku enters into the 90 and the 85 level. You have a spike to the downside. Market retrace. You close your entry around the middle. Then you put your stop loss here. Then you target spike after this low is broken. First spike, then another spike. Then you will close your trade completely. So another good thing about this strategy is that you can also use it to trade this retracement to the upside in the crash market. So this is a little bit easier to trade when you are trading the retracement. So for the zoom level for that, you will zoom out completely, just like you see over here. Then you will zoom in 3 times. 1, 2, 3. So this is the best zoom level for this retracement strategy. So you want to see a spike to the downside that pushes this Ishimoku and this line into the 15 and the 10 level because we want to buy. This is the crash 1000 market, you can see over here. So after you have the touch, then you want to pay attention to the cross of this moving average. You enter your buy, then you count 5 to 10 candles. Then you wait for another opportunity. So over here is another one. You have market spikes to the downside, pushes this Ishimoku and the moving average into the 15 and 10 level. And you want to wait for the cross of the moving average on the main chart. Enter your buy and then you count your 5 to 10 candles. You see how market delivers that. And for the bull market to trade the retracement, that means that we want to sell the bull market to the downside. So what you want to wait for is this Ishimoku and this moving average enters into the 90 and the 85 level. So basically the spike and the retracement is opposite to each other. You have it enters into the point here, you have the cross of the moving average, you enter your sell 5 to 10 candles. Market delivers that. Then over here, another entry, cross, then you count your 5 to 10 candles. See how market delivers that both. So basically that is what I want to show you for this video. After this, I want you to go back on your chart and backtest this strategy, the 2 ways of using this indicator to trade these markets. So you can also go on your demo account and trade it in a live moving market. After you've seen how nice and profitable you are with your demo account, then you can decide to do whatever you want to do with this strategy. If you find this video helpful, don't forget to like this video, subscribe to this YouTube channel, turn on the notification bell so that you get notified anytime I release a new video. You can also check out my other videos that are displaying right now on your screen. Thanks for watching.